Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, April 3rd, 5:06 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. Still recommend excluding financials and real estate due to the bank crisis and a lot of bad news coming out about commercial real estate in particular, again, related to rising interest rates, rising a little too fast, and that's what's dragging down those two sectors. Check over here in the trend gauge. We had an upgrade today. Short term went from neutral to up as all five of the major indexes, yes, even the small caps, which were dragged down by the banks, now with two closes above the 21-day moving average. So we're flipped to bullish slash uptrend short term on all five major indexes. Leaders last week went to uptrend. Medium term, this is all five of the major indexes versus their 50-day moving average. The three large cap indexes are above their 50-day. Mid caps and small caps still below. Long term, four of the five above the 200-day moving average. We're showing neutral there. Small caps being the sole laggard below the 200-day moving average. And again, this is mainly due to the banking liquidity crisis. So what happened today? Surprise OPEC cut over the weekend. Oil spiked and oil stocks benefited. We had a mixed open and a mixed close as tech and recent leadership focused on tech took a break. Pretty decent close in those stocks, however. NASDAQ 100 down over 1% at one point, trimmed that quite a bit. And as I said, healthy rest for leadership. Some of them got too extended, and healthy rotation. And this rotation, this is a day why we're happy to have a leveraged S&P 500 ETF. I say it all the time. All the rotation takes place within the S&P 500. So when you go from tech to oil, that happens within the S&P 500. Yes, I know there's drastically different weights between the sectors, but half of its value, half of its growth, despite half of the sectors being or despite the disparity in the size of the sector. So um, we like that as a ballast for our portfolio. So here are the final numbers. RG7 leading stocks. Most of them finished higher, but all 10 of Kathy Wood's ARC K holdings, top 10 holdings, were negative on the day. They have been showing some pretty good strength recently, but in fact, 7 of the 10 are above an 80 3-month relative strength. 8 of the 10 are above a 90, but taking a break today along with the rest of the recent tech-centric leadership. So down 0.17. This is our 7 ETF composite. ARC K is the most volatile of the 7. S&P 500 opened negative by 0.1%, based most of the day. Strong close, up 0.37%. NASDAQ 100, I already mentioned, down over 1% at one point, trimmed that to down 0.25%. Dow was the leader today, but this is misleading. It was the heaviest weighting stock in the Dow, United Healthcare, that accounted for about half of this gain. Dow up 1%. Mid caps and small caps volatile on the day. They went back and forth between red and green. Not a good day for banks, but still closing near flat, just slightly lower, kind of a win for mid and small caps. Global diversified 60/40 stock and bond up 0.5%. Bond prices up across the board, meaning yields lower. In-house GROTECTION down 0.08%. A downgrade on First Solar hit our portfolio, as did Tesla, being down 6% on a perceived miss in its deliveries. We'll go through the tail of the tape and charts of interest, including a brief discussion about actually, we're showings down 0.08. It's actually closer to 0.04. And let me explain this right off the bat. SHV, we have 10% in this ETF. This is a short-term treasury bond ETF. And once a month, it has a big gap down. can see the big gap down here, down 0.36%. But all this is it going ex div, and this 0.36%. You multiply that by 12, that gives you the effective yield, which is over 4%. So we just have to wait a week or the end of the week until uh, this portion, this what was lost today in the price and in the bottom line on our accounts, gets posted to the account on Friday, 4/7. So slightly artificially low when you have a 10% size that it gaps down this amount, but it's not a loss. It's consider it to the check is in the mail. On this ETF, short-term Treasury bond. Same situation with BIL. This is another one down 0.38%. You can see how these just trickle up as the dividend accumulates during the month and then gaps down at the beginning of the following month after it goes ex div. So SHV, let's get that out of the way first. Then we'll go to the S&P 500. Go to the 5-minute chart. Actually, we've got kind of a missing data here on from MarketSmith, but we did gap down a tenth of a percent and then started rallying up to 41.27. Then a little bit of a sell off and really kind of a big cup base on the day, nearing closing near the high of the right side. All in all, I consider that a win. Let's go to the NASDAQ 100 real quickly on a 5-minute chart. You can see the bigger gap down there and then accelerating losses, but a nice close here uh, on NASDAQ 100 and tech in general. And you can see an inside day there, impressive after the 3 strong up days that we have. So uh, still holding this breakout. This was a little handle that we put in a couple days, Monday, Tuesday last week, before finishing the week strong. And all in all, a winner today. I would say I really didn't see anything wrong with it. It's normal digestion in recent leadership. Let's go back to the S&P 500 quickly, and you can see the higher closing high. Next area, we're in this range of resistance here uh, that goes up to around 41.95-ish. And there's also a big Fibonacci level at 41.99. So that's the next target and where a pause might also actually happen. Let's flip to the Dow, which, as I said, outperformed today, up a percent. Some nice candles that the Dow's putting in after a nice tight consolidation last Monday and Tuesday, very similar to the rest of the mid cap or the rest of the big cap stocks. But note the lagging relative strength going back to the beginning of the year on the Dow. Let's flip to MDY mid caps now. 2 closes above the 21. The 21 is hooking up. Good stuff there. And then IWM, despite all of the headwinds, 2 closes above the 21 also, but below the 200 and below the 50-day moving average. And that is primarily because of XLF, which is coming right into the declining 21, KRE, here, this is the regional banks, which still looks awful, and KBE, which contains some of the bigger money center banks, also consolidating for the last 3 weeks and stuck under the 21. XLRE, a little bit of improvement, 2 closes above the 21 also, but it's really the commercial part of the real estate sector that's having problems. What's next? The dollar. Not hasn't been a strong correlation with the dollar and stocks recently as the dollar continues to consolidate here below the 50 and the 21-day moving average. It is overbought. A strong move by the dollar would be a headwind for stocks that might coincide with us coming into that 4,200 level and possibly taking a pause there. We don't predict. We'll see what happens. VIX. Another lower low on the VIX. 1, 2, 3, 4, 5, 7 straight lower closes for the VIX now. We're into this big area again where we really don't go much lower. And again, a spike up for the VIX where we're oversold would also be a headwind for stocks. How about bonds? BND, broad bond index up, bond yields down across the board as prices were up. Here's LQD. Corporate bonds up 1/3%. TLT. This is the 30-year up 0.22. IEF. This is the 10-year ETF up 0.27. So let's check the yields. Here's the 30-year down 1.2%, sitting on the 200-day moving average. 0 TNX yield, this is the 10-year, down 1.8%. So this, what looked like a shakeout in yields, we're coming down to test that area again. So that's interesting, around the 3.4% area on the 10-year. With the dollar being weak, gold was up today, up 0.72%. Gold stocks, GDX, even stronger, up 2.26%, continues to ride that ADMA higher, looking great. Silver SLV down today, consolidating recent gains, and Bitcoin BITO down 4% on the day. This has really been in a tight range for the last 2 weeks. Okay, so those are the major indexes that we check in on and talk about what we do at Revere. It's active management based on our read on the market. We're technical analysts. We stay out of the way when the market is unhealthy, which it was for most of 2022. You can see this severe downtrend on this weekly chart, and we missed most of this. Um, and then when we start getting short-term signals, then an intermediate-term signal and a long-term signal, long-term being the black line, we start putting money back to work. Why do we pay so much attention to that black line? Because bear markets occur there, plain and simple. Usually it's about a 12% drop, 10 to 12% from a peak till you break the 200-day moving average. That's pretty easy to come back from. But it's what happens below that 200-day moving average that you have to be concerned about. And last year, down 27.5% high to low. There's COVID down 35% in 5 weeks, 4 weeks, 5 weeks. Brutal. We managed to get out of the way of most of these. Now we're compounding capital with the market back being healthy again. If you're interested in this approach, reach out to me. Either email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. We're going to hit a new high in assets long before the market hits its new high, and that's a testament to people appreciating what we're offering. Really, what we do is we're disrupting the typical asset manager, um, financial planner relationship by getting out of the way of these bear markets. I mean, what good does a financial planner do if you get your butt kicked coming into retirement? And then if they flip you to bonds so that you should be safe, you were down just as bad last year because bonds got absolutely destroyed. So there's a time to be a hero and a time to get out of the way. Right now, um, we're back in accumulation mode, grow mode. The protection part of GROTECTION, which is our flagship portfolio, that kicked in last year in the downtrend, but we're back in the growth mode now. So let's go to the tail of the tape. You can pause this to read the whole thing. I'll hit the highlights. So the OPEC surprise production cut that sent oil higher. Also, ISM manufacturing index down for the 5th month in a row. Everybody's still talking there's a recession coming, and yeah, it's coming, but how hard is it going to be? Is it just going to be a cut to GDP? Is it going to be a recession? The Fed likes to see this, although the spike up in oil is not certainly going to help the inflation data. But the inflation data that came out last week, we got a positive response to. And manufacturing slowing down for the 5th month in a row. That's again pointing to Fed policies that are slowing the economy to slow. The rise in inflation, the rise in interest rates, and the market is saying that the Fed should be done, although the Fed is not committing to that. Market pricing in 50, basically a 50-50, well, 55% now that there's going to be one more and considered final 25-point basis cut, 0 basis point rise, 25 basis point rise. No rise is priced in at 45% right now. We'll see how this varies as we go into the next FOMC meeting on May 3rd. 7th day above the 80 EMA and the 21 EMA. We've been up 6 out of the last 7 days. Expectations stay positive as long as we're trending above the 21. Inside days between support and resistance on the NASDAQ and the S&P 500. Here's the action. Here's the sectors that lagged. Notable, um, taking the break, semiconductors, software, and solars. This is what led last week. What we did in the portfolio today added to our ONON. This is screaming that it's a leader, and snuck into AI today on a pullback, raised our exposure risk. Volatility adjusted beta is what we call it. From 1.5 to 1.63. For reference, the S&P 500 is 1.0. Bottom line today, OPEC cut led to oils being up, mixed open and a mixed close, but all in all, a healthy consolidation as most leaders rest. Let's take a look at a couple of charts and then a couple that will highlight inside the portfolio. I already showed SHV. UNH, like I said, this was responsible for half of the Dow gain today, up 4.6%. It's a high price stock, $494 stock, up 22 bucks today. So a little bit misleading on the Dow, but hey, if it drug it to the downside, it might as well lead it on the upside. Two additional leading stocks that acted pretty well today. SMCI bounced off the 21 last week, and put ENVX back on your watch list. The president and CEO has continued to buy stock even during these two drops from their earnings reports. They reset expectations, so they swear they have a breakthrough, but they haven't been able to produce it yet. But they found a partner over in Indonesia, I believe, to build a factory. That's what was responsible for these 3 days up last week. It took a break today. A lot of smart people I know paying a lot of attention to this stock. We don't own it, uh, but note the accumulation. And anytime you see a CEO buying in the open market, uh, there's a lot of reasons why CEOs sell. There's only one reason why they buy, and that's because they're optimistic about the company. So let's add on ENVX. So let's go through the portfolio very quickly. We added AI after this massive move last week or last Friday, after a nice little rest period on lower volume. I was kicking myself for not getting into this when it pulled back today. It pulled back to the pivot plus 5% area, and we took a 2% position in there, positive on both buys, which is always a good way to start. ONON. A lot of talk about a short stroke here on a weekly chart after this big move up. A little bit wider than normal, but tried to break higher today. Lows right coming into this 80 MA and then bouncing off of it to the upside, which is a very typical signature for big volume gap up stocks that continue to the upside, and having the market healthy market leadership working. We've got that at our back, and that's certainly working too. Lululemon continues to consolidate its gains after its gap up. Highest closing high now on day 4 after the earnings gap up. Tesla had the rough day today after breaking out last week. Volume basically in line with the breakout, still holding above the 21 EMA easily. Back into the base, didn't hit the pivot minus 7% level either today. AMD just going sideways, bit of a laggard in the portfolio compared to some of the ones that have been really moving, like NVIDIA, continues to make higher highs. ANET will be looking to add into this. It looks like it's put its shakeout behind it today, and it held up very strongly all day today off of the 8 EMA. Palo Alto continues to consolidate at a higher level now after breaking above this shelf last Friday. And let's go to ARK-K. As I said, all 10 down today, only down 1.88%, which is pretty good. We know how this stock can run during a strong move higher for the market. Here it went from 29 to 45, a 50% gain in 4 or 5 weeks. That's what we're looking for out of this. So I'll take a little bit of initial pain and we're underwater about 2% on this, but actually about closer to a percent. We got some gains last week, um, but we're okay with that right now. Gold is not keeping up with the market now, but the chart looks fine. Um, Note the relative strength or weakness, 2.5% size on this. That's portfolio overview, and we'll finish it up with that. So remember, it's not how much you make in the market, it's how much you can keep. We've got some nice positions. We're happy with our cost basis. Now we keep our stops in place and see if the tailwind that has exhibited itself over the last 4 sessions can continue and put a smile on our clients' faces. Uh, which is would be nice for a change after what we've suffered through 2022. Um, as I always say, every day you survive is one day closer to the next bull market, and there's a lot of opposition to this being a bull market with sentiment being as low as it is. But the market continues higher in the face of that, and that's why we go by price and volume and not by the headlines. So with that, I'll wrap up Monday, April 3rd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.